against what normally is probably double that. In fact, if I bring up the ATR study here, what you'll see is that the typical daily range right now, 14-day average, is about 54, 55 points. And we put in something less than half of that, basically finishing near the open over the weekend. And again, we're unched from last Friday, essentially only at 0.04%. And this is an interesting day to see this, right? We have CPI coming up this week. We have potentially debt ceiling discussions kicking up tomorrow, the Biden administration with members of Congress, potential congressional revelations on Wednesday regarding corruption, et cetera. All this stuff that could really move the markets. And what we're seeing is very divergent views. For example, communications higher. Netflix is part of that. We'll look at some unusual option activity there. Cyclicals was up a little bit, whereas real estate and industrials and materials were down today. And again, nothing big necessarily with the exception of communications as a sector. But boy, we're just really seeing this kind of like this compression in the market as we're seeing a very, very tight trading range near highs. And what's the next step? Do we break through the highs and trade higher, or do we break towards the lows and maybe even go lower? And as we look at the volatility gauges, it certainly gives us an indication of not necessarily what's going to happen, but where the risks lie at the moment. So let's quickly take a peek at that. So I'm going to kick things off by looking at the VIX. As we look at the VIX, we saw a big downturn on Friday. We were down slightly or basically unched today, trading at lows around this 17 level. Now, the thing with the VIX is that we look at extremes, extreme highs, extreme lows as an indication. And right now we are on the extreme to the downside. A better way to represent the VIX or the extremes is the 3-month to 1-month VIX ratio, or the forward premium. Basically, we're trying to identify is how much higher or lower is the 3-month VIX against the 1-month VIX. What this is designed to do is indicate potential inflection points where volatility expectations are peaked. And right now, the 3-month VIX is about 21% higher than the spot VIX. And you kind of see that in this upper level here above 1.2. We've had this a number of times. On the 19th of April, for example, we got it again here on the 28th of April. We got it back here on the 2nd of December. And we actually touched intraday back here on the 18th of August, really the 12th of August. There was a major kind of inflection point being priced in using these gauges. And so what we're seeing right now is that volatility expectations are very peaked, and the outlook for future higher volatility in the near future is fairly high. And as we kind of transition back to the /ES, and again, you can kind of see at various points here, right? The 19th at this level, we saw a dividend dip. We saw again on the 28th of April. We're seeing the exact same signal today, which we also got on Friday, by the way, and it's just extending. The intent of this is saying, look, we're looking at maybe a 5 to 10% correction in the next several weeks. And right now we're just kind of boxed in with the volatility on the high end, capping at about 4,200. And hopefully we start to open up the downside. I say hopefully because as a trader, as an investor, you want better points to buy stocks, right? If you're going to be long the market, and certainly seeing corrections help kind of clear the overbought area and start to open up the opportunity or the value. And we'll look at a couple of those in this session today. As we look at skew is an indication of whether hedges are being put on or taken off. And as we're looking right now, this is an end of day data point right now. And what you'll see is that not only has this been generally rising since the beginning of the year, notice this cluster up here above 130. Essentially for the last little over a month, we've seen that the skew index has been north of 130, which is historically represents what? Significant degree of hedging and an outlook that suggests the downside risks are pronounced. I realized 2014 through 2018 or so, yes, it was elevated for a long period of time as the Fed was tightening. But this time, again, this is just more normal of what to see, 130 being that threshold for the prior 20 plus years. And so again, we're seeing this convergence of high volatility expectations and skew that suggests our downside is pronounced. But when the downside is pronounced by virtue of higher skew, you do typically have a higher number of a greater frequency of small up days. And is there a better representation of that than today, given the very tight trading range being up minimally? And so expect the upside. We might grind it out here over the next several days or longer, but the upside will remain relatively limited with smaller updates, unless maybe there's some grand news that comes out that may shift the dynamic and may cause the skew to fall. But inevitably, we're just pricing in the risk of that tail of a large downside move. And so what you may see is more climbing the stairs here, but we're starting to see the window approaches. The only question is, how far is it down once you fall out the window? Okay, so that's what we're kind of working with right now. And obviously, banks have been at the front and center of this kind of weakness, but we did do relatively well despite the cracks we saw last week in the regional banking space. We bounced back on Friday. In fact, during my session on Thursday, I talked about kind of a trade looking at kind of keeping the downside with some individual bank names, but a upward bullish vertical spread in case we see a snapback, a short squeeze. There was evidence on Friday that there was some, Thursday rather, that there was some significant, I think I talked about in the video as well, that I did Thursday, that there was some significant kind of hedges being put on KRE, and we gapped up this morning and we faded late. And you look at stocks like US Bank, a regional bank, got a pop on Friday. And you'll notice today we actually saw a pretty nice and kind of almost engulfing type formation of Friday. And again, what we're looking at in this is a neutral candle on Friday. We tried to make a move. We finished at the same level we opened. And today we're seeing a reversal on average volume. And the expectation is to probably see US Bank start to see a correction here. And again, as you look at USB, this is a 12 May expiration here. But this is a 30 strike and a 28. It's a long vertical in here in this buying the 30, selling the 28. Could we see $28? Absolutely. That's just above the low from last Friday. So all we need is a short-term pullback here, and that's in, right? So again, it's one of those things where do you reset and start to take downside trades on the bounce? For regional banks, that might be pretty reasonable. But these types of trades, verticals like a 30 and 28, allows you to do it with really defined risk. Maybe it costs you, 60 cents on a $2 spread, your maximum upside $1.40. If by the end of the week, we're below 28 bucks. It becomes kind of attractive way, limited risk, but be prepared to lose all of it. It's a very short term. You could extend the time frame if you want, get out here closer to 30 days, for example, and put on a similar type spread, and probably stick with the monthlies on a 39-day expiration here. 30, 27, 50 may cost you, 85 cents on a 250 spread. Again, maximum upside $1.65. Again, but still a very nice reward to risk scenario. Virtually a 2-to-1 and 27.50 is the target. And you may have a chance of capturing 30 to 55% of that over the next several days or next several weeks, depending on how long it takes. So there's lots of ways to kind of skin a cat in terms of strategy, but the signal is what we're seeing right here, right? The bounce, and we're starting to see things engulf and fade, and a lot of stuff coming up here that may prove prescient in terms of the downside moves right now in banking. So do you take the opportunity on the bounce on Friday and take a look at today's move, and let's start to look at the downside? We may retest the highs again, right? The higher this gets, the better off you may be at looking at a downside spread, trying to capitalize on the downside movement. But anyway, let's turn our attention to communications, which was the strongest sector today, up 1%. And of course, we can run scans for unusual option activity within communications. I spent some time during my session today doing that. It's really easy to create scans that identify activity, like I'm going to show you here on Netflix. But Netflix was higher, right? We had the nice run. We had the pullback here, a series of lower highs and lower lows as we began to form kind of a base here. If you notice, if I draw a retracement off of the upswing, what you'll notice is this downtrend was just a corrective wave, or it appears to be, testing that 50% retracement area. And all of a sudden today, while the volume was maybe slightly below average, the close was very near the high of the session. And if you look at today's trade in Netflix, there's a number of trades on Netflix today. But again, we'll look at the May 330 right here, 13,000 contracts, mostly bought against 2,000 open interest. So this is new. This is opening activity. mostly bought at the 330. And this creates a very kind of key level right around the 330 area. And if we look at this intraday today, 5-day, 5-minute, what you'll notice is that we might ratchet this up to about the 332.50 mark. That if we start to take this out, this could create a nice little swing, looking forward to retest the prior high at 351. Again, this types of things can be done vis-a-vis a spread. The only problem is we do see declining volatility out here. As again, even as you get further out, 39 days, you'll see again, the vol is declining as we move out of the money. And so again, the pricing is not as advantageous. There are things like, for example, call ratio back spreads and other things if we're targeting a much bigger move. But this is one that we're looking at. I think retesting 350 could potentially stretch to 367 as a swing trade in Netflix. And again, the option activity coming in today and creating a level. So we want to trigger to see that we move through the high today. On Friday during my session, I talked about some of the areas I saw rotation, and that was in two areas that we were talking about was in generic pharmaceuticals, specifically Teva. Teva's been one we've been on for a little while, as far as a couple of weeks, anticipating some bullish movement. Initially, option activity here end of April. We finally got the break. We got the pullback. And on Friday, again, seeing strength in generic pharma. And again, specifically, we're looking at Teva for the last couple of weeks. Option activity as well in this consolidation. We finally got the breakout again today. And so what you're seeing is a wave, a correction, another wave beginning here. So when you draw this, fib projection, you see 161, about 940, 950 up here. That would be kind of that near-term target. But again, this is a little bit more of a defensive opportunity coming off a very similar type play that we looked at back here in December as an example, where this thing ended up retesting prior highs. Is that what's going to happen this time? Who knows, right? But the idea is that the setup and the potential projection is laying out. So it seems like that might be a very improbable, but possible. And again, at least looking at a 950 potential target here in the near term. Of course, nothing is for certain. The company does have earnings coming out, but it appears that there'll be some buying, earnings on Wednesday before the market opened, some buying in anticipation there could come out better than expected. So again, you could wait for the earnings or look to get in ahead of it. Something I discussed last week was the idea of, do you buy the stock and buy a put option, right? It's just something that allows you to get through the earnings. In fact, this would be the 12th here. You could buy a $9 strike here for about 24 cents. So all of a sudden, if you're buying 100 shares, you're covering it with the 24-cent option, the ability to sell it at $9 in case things go awry. So there's lots of ways to potentially approach this, but the idea is that we've seen rotation into stocks like Teva. Another area that was kind of interesting today, and as we look at the commodity space, forward/GC, gold was flattish today. Certainly a lot of just anecdotal news of central banks buying gold. Go figure, right? Do you want to get out of the dollar? Do you want to get something more sound? Yes, gold's probably going to be one of those areas you go as a central bank or banks in general. As we look at forward/CL, oil was up minimally today. Last Thursday was positive option activity, bullish option activity in Denbury as it was forming its low right after its earnings, snapping back the last couple of days, as well as MRO as well, although it did fade from the high today. Is there strength in oil at the moment, right? We're kind of coming off our lows, but the product depth here is that we're in backwardation, falling prices in the future, which means these forward prices should converge with the spot. We have a lot of bullish dynamics playing out in oil right now. The exception being is there an impending recession? If you look at interest rates right now, it certainly looks like, if you consider the Fed funds rate, you consider where the 10-year Treasury yield is right now. We got inflation coming up on Wednesday as well. A lot of stuff that could move the bond market. But right now, given the Fed having raised rates to 5.25, we're certainly looking at a significant and very steep inversion to the yield curve in the bond space, which suggests that recession is potentially very much on the table, despite the lagging indicator we got last week in jobs numbers. Again, you wait for unemployment to start to tick up. You're already in recession, by the way. So as we look at this picture, rising interest rates, if we're going to see the 10-year start to rise here, this creates some headwinds for gold. And last Thursday, I did discuss some bearish option activity in GDX, looking for a downside move here, limited. So again, it's hard to say you're expecting a big sell-off in gold, but we are stretched right now. Both gold and oil had a nice couple of days. We may see ourselves resetting the downside if the Fed remains in its hawkish stance and it starts to move the dollar, which, by the way, if you look at UP, this is mainly the euro/US dollar, or the inverse. Does the dollar start to pick up and we see things pull back? We may see some of those areas start to retrace with it. And as we look at two areas that are kind of tied to the agricultural space, MU is at support down here, although stocks like Archer Daniels Midland have failed to garner any strength. The last time I was bullish on ADM and ag was back at the very same level we're seeing here. Not seeing a lot of option activity necessarily. Mosaic broke through the floor on its earnings last week. You can look at FMC. It broke through its floor on earnings. This has not been great in that a lot of the wet weather's delayed planting, among other things. But Scott's Miracle-Gro today appeared to buck that trend. And so we're seeing is that the earnings came out, the stock declined. And if we notice, this was the uptrend that preceded the most recent downtrend. And we start to measure from low to high, and we gauge this. We touched the 61% retracement. As we look at the price pattern over the last little bit of declining highs and declining lows, but converging. So what we have here is what's called a falling wedge, and falling wedges are bullish. Stock got upgraded today, breaking out. What's the potential? Volume above average. And generally speaking, we've seen a lot more above average up days over the last several months when compared to down days. We're getting the breakout today. Today's low should act as an area support around 69.50, but the projection in the coming weeks would be upwards of about an $88 target as a falling wedge target price is the preceding high. So again, some strength. So this could be kind of an indication. Maybe things are waking up. But again, looking at the most recent price action across this sector, it's not been great. And generally speaking, most of these players have been relatively bearish. Even Bungie, whatever they pronounce their name here, we're testing support. We'll see what happens. So again, look for maybe a bounce. Again, we're testing recent highs in the ag space. But man, all of a sudden you get this trade today in Deere. I didn't discuss the option activity in SMG. There we go. So in SMG, the trade in SMG today was a June expiration out at the 80 strike. So again, mostly bought at the 80. So again, we're looking at the prospects of SMG getting back to prior highs. Now that's in direct contrast with what's happening right now in Deere. Deere's been kind of winning in here, lower highs, kind of equal lows at the moment. And again, if we break through the lows at 366.58, you'd probably look at the range here between 400 and 366. That's about $34. We're looking at this thing getting down towards this 330 area. And it was interesting today with Deere. It was a June expiration, same expiration as Scott's Miracle-Gro, targeting the downside, buying 350, selling 320, a downside put spread. You're buying the lower vol at 37, selling the higher vol at 42, making this a relatively reasonably priced, out of the money vertical spread, low risk. Well, it's going to cost you about $4 on a 30-point spread. So cost you 4, you got 26 of upside. What does that tell you? It's a low probability trade, clearly, but again, we're looking at this thing maybe getting down to 320, maybe retesting the lows down here. So the question is, do you look at trading something like this, taking a flyer in the prospect that we test these lower levels? Even our low, for example, back here in September, about the 320 mark, a little above, almost 330. So again, looking for a breakout to the downside. Earnings are coming up here. This does provide very limited risk, high reward. And so if it does go the other way, as long as if you position size, you trade enough contracts, you can reasonably and easily take the max loss, you have the potential to capture the upside if the economy and it starts to weigh and the outlook on construction equipment like Deere, for example, starts to play out. On the commodity front, let's look at Rio. So Rio caught a bid yet on Friday. We gapped higher today. We faded from that same high. And this is a decent area support down here on 62. And let me just clear my chart out here, because when you start to look at where we've been, right? We've had this nice uptrend. In fact, let me just bring up my fib retracement tool. When you see this really nice uptrend we've had for the last little while, I'm going to shave off that kind of aberration there. But you see we're at this 61% retracement. If we break through this, the expectation would be we go back to 52. If the dollar strengthens, if we start to see commodity demand start to falter, is the real economy is starting to slip, if that's kind of what happens, Rio should see further downside here. And we have had some pretty high volume down periods, another high volume down period here, both testing the same level. If buyers just don't come in here, we don't see a break to the upside, we should see a break to the downside, and we could have a pretty nice run out of it. So you might look at this area around 62 as kind of a trigger, or again, the spread side of things makes it relatively cheap. Now, this case, this was a May expiration rather, buying the 6250s in here. So again, this is a long put trade at 6250. Again, we start to break that level, could it create some gamma, start to push the stock lower. So watch for companies like Rio, for example, in the mining space, to see a little bit of downside pressure if we start to break. Now, I realize we've talked a lot about the downside right now. We talked about the upside in Netflix. Well, what about a stock, in fact, the leader of the S&P 100 today, which is AMD. AMD was up nicely. You can kind of see this downward channel it broke out of, then had a major drop on its earnings. We've been bid since then. We put in the high, we gap lower, we rallied on Friday. Today, we're actually taking out the high, and we're eyeing a retest of 102.50 up here. And as you look at AMD, this is a weekly option, so relatively short-term in nature. And you see this just continue to roll out to higher strike prices here. But this really kicked off this morning with the 89, and it just began to just continue to diffuse out to higher and higher strike prices that help kind of fueling the stock to continue to rise. Certainly you could look for the possibility of a retest at 91.25. But again, this is a weekly expiration. At times this activity does get faded. There's 4 days left in the week. Finishing near the high of the session, we may see ourselves at 102.50 in the short term. But again, there are risks this week that could pressure to the downside. But again, if you take a relative balance, the stock may have what it takes to potentially get there. Another stock in the communications space, along with Netflix, is FUBO. And with FUBO, this is a company that has over 20% short interest as of mid-April. So again, a little dated. We saw, over 50 million shares traded yesterday, 58 million. Today we saw 47. Has about a 200 million float on this. So we're turning this thing over pretty quickly. But as we've seen with past short squeezes, this thing can make a big run. $1.60 to $3. We go back even further out here. Major short squeeze, for example, right here, 14 up to 35, right? This one down here, 783 to 62. I'm not suggesting that we have the same kind of movement, but could we see an 8 handle? Unlikely, but possible, right? That last move back here in July was from 230 to a high of 8. Even a move to like 325. The idea with this is that you're expecting to see a further short squeeze. Fundamentals not great. Maybe outlooks maybe reshaping just a little bit. This was at the $2 strike price today, maybe kind of rolling some of this stuff out. But the idea is we're targeting higher prices, $2.50. And this is one that, again, these options are fairly cheap at 8 cents or $8 a share. And so you have to understand there's a very, very high probability you lose all of that. But it could have a big, big multiple if there's a short squeeze. And this has been a tough environment to bank on it. But, again, we've seen a little bit of rotation here. Earnings came out. Caused a little bit of a bounce yesterday on Friday, and we're seeing a continuation of that movement today. So again, if we, open up, kind of a similar territory towards the close today, you could look at it and evaluate the opportunity. And again, we may see further pressure to the upside that could see a continuation of the short squeeze. So again, it's a little more of a gamble, but it is kind of interesting. Finally, we'll kind of wrap things up with Geo. Man, you hear all this stuff about crossing the border. And again, I'm not making a judgment call over yes or no. But the idea is that here's Geo Group Incorporated, right? We go to the Analyst tab here on thinkorswim. It's a diversified government service provider designed to finance development and support service for secure facilities, processing centers, community reentry centers in the United States, Australia, South Africa, etc. So, I mean, again, not much of any news. In fact, looking at the live news today, there's nothing in thinkorswim on live news, generally speaking. This was a nice, solid move, up 8.7%. And when you start to think, look back at this downtrend here, 975, 1038, this would be a reasonable retracement area on a stock that's in a downtrend, even if this is the primary trend, right? A retest of 38.50 and 61 are reasonable levels to expect. And we saw today, this is a May expiration out here at the now at the money $8 strike price, maybe even more filtering through. But this is one to watch. Maybe look for it to take out today's high as a trigger. But again, we may have a chance of running to 9 to 1050 here in the near term. From a liquidity standpoint, there is some depths here, kind of the at the money. Could you buy an 8 and sell a 9? Well, as you look at the implied volatility, we are seeing higher volatility on the out of the money calls, which makes long call verticals more favorable. And this does accentuate the potential upside here if it ends up playing out. And frequently you'll see, and I didn't check the short interest on this particular stock, but normally this accompanies this kind of volatility structure accompanies a high short interest. And again, could a short squeeze be afoot here that could drive things for a couple of days? And we're looking here, a short percent of the float's 35%. The short ratio is 12.8 days. And so again, we're seeing FUBO, as an example. Here's Geo, another stock that has substantial short interest, and the volume should be really impacted, right? Again, a short ratio of 12 days says it takes 12 days for it to cover the 20 to almost 23 million shorts that are shares short. That's as of April 14th. And this would probably potentially be the beginning of a major short squeeze here. Could very well carry it here. So look back at other maybe periods where we've seen a bit of a short squeeze, but substantial short interest in Geo. Looks like there is maybe taking a couple of stocks here, trying to create that kind of squeeze. And for Geo today, it was the May 8, as I said, and we may see more interest kind of pile in here, helping create the gamma squeeze, driving it to the upside. Anyway, folks, we'll wrap it up there for today. Catch you back next Monday.